Welcome to the Commercial Property Podcast. My name is Suzi Carter. I am a chartered surveyor. I've been involved in commercial property in the UK for 30 years and I've done hundreds of commercial property deals. I'm here to be your guide through the commercial property market, whether you're an experienced investor or whether you're literally thinking about dipping your toe in the world of commercial real estate. I will be here talking to you about all kinds of things commercial real estate in the UK, and I've also got some fantastic guest experts who are joining me. So please do subscribe if you'd like to follow, and if you'd like any more help or information on commercial real estate, please do click www.suzicarter.com, which is my website, and you can find out all the ways I can help you. So stay tuned for this week's episode. Welcome back to the Commercial Property Podcast, and today we're talking about strategies that work at the moment in commercial property in the UK. Now, what's important to say really before we kind of launch into this is that strategies will work all the time, and you can find great deals in whatever market we're in whatever location we're in. And the important thing is to understand what makes a deal and what doesn't make a deal. And, that's the skill in commercial. So, some people just want to park money in commercial property. And, so something, maybe a food store at 7% would be a deal for them. A nice long lease, great location, good trade for the food store, trading well, loads of customers, great parking, alternative uses, whatever it might be, that might make a good deal for them. Equally, if you're at the, making money phase, as in you want to get your money out of deals, you want to momentum invest, then that probably wouldn't be a great deal for you. So I think the first point to note is you need to understand what you're aiming for. And that's why I always recommend to clients that you start with the end in mind. You want to start with what your objectives are. So if you're at the parking cash phase, you've got business profits to invest and you want just total hands-off income in a long-term lease in a good location, then the type of deal I've talked about might work super well for you. But if you're not in that space and actually you're building cash flow, you want to build capital, then there'll be other strategies that you can pursue. So it's really important to understand the strategy before you get going. But there are deals everywhere. They just suit different people. So if you're an institutional investor, you might want to be investing in prime regional offices. That's something that a lot of institutions are investing in. You might want to be investing in logistics or life sciences or cold storage or data storage, because the longevity for the future with those kind of sectors is good. It ticks a lot of the boxes with trends. Yes, they're expensive, but you can get great tenants on very long leases, 15 to 25 years. And, they're solid investments, especially if you're someone like a pension fund that wants secure returns over the medium to longer term. But what I'm going to talk about today is if you're at the stage where you want to build cash flow, and you want to get as much money out of your deals as you possibly can, because obviously there's certain strategies that work super well for that. As I say, there's strategies that work well for that all the time, but at the moment there's certain strategies that work particularly well. So let's talk about those strategies that work well all the time. So what we want to do is buy properties where we can add some value. And, this is where commercial is very different from the residential world, because in the residential world, what we'd be looking for is below market value properties where they need a damn good refurb. You might be able to extend them or change their use maybe into an HMO or something like that. And, you look at comparables. You might be on commercial finance if you're in a big HMO, but otherwise you're valuing on bricks and mortar value, and you're looking for comparables for that kind of deal. What's different about commercial is that you value commercial property differently. So it's rent divided by yield gives you a capital value. So the higher the rent is, the higher your capital value. And then this yield, this multiplier that you apply to your commercial rent, the rent that's being paid by tenants, It's a multiplier. It basically is called the all risks yield. What that means is it reflects all the risks. So what a valuer will do is use their skill, their experience. They'll take the comparables and they'll adjust it for the quality of the tenant, the length of the lease, the quality of the property, the location, the market, whatever else it might be. And they will use their skill. That's why valuation is an art, not a science. So when we're looking to add value, we want to influence kind of either or both sides of that equation. We want to increase the rent and we want to reduce the risk or reduce the all risk yield. And that's called yield compression. Maybe buying at 12%, doing something to the property to make it less risky, and then refinancing at, say, 9.5% or 10%, or maybe if you're really lucky, kind of 8.5%, whatever that might be. So, and I say lucky there, what I mean is you're skillful because you've bought the right property or you've bought it at the right price. And of course, buying at the right price is a really important component of this stuff, because if you overpay for a deal, you're constantly going to be struggling to add value. But, longer term deals work. So don't be intimidated by that. But, there's certain things to look out for. So, for example, if you buy a vacant property, buying a vacant property is a great way of adding value on one condition: that you know how to fill that property with a tenant or tenants. Because a vacant property is valued, because we do rent divided by capital value, there's no rent in there. Sorry, rent divided by yield, there's no rent coming in. So it's very, very risky, that property. So a valuer will look at it and they will work out how long that property is going to be vacant for, and they're going to kind of work it out that way. And technically it's a bricks and mortar valuation, although that's not quite how valuers calculate vacant possession value. So if you can find a vacant property and then you have some market knowledge in that you know how you can get that property let, then you can add massive value because you're reducing the risk and you're bringing some rent in. So, that might be that you can reconfigure the space and actually make it more attractive to a wider range of tenants. It might be that you have a specific tenant in mind who wants to take the space. It might be that the previous landlord had the property on with the wrong agent. I've changed agent and let properties really quickly. Clients of mine have as well. So you've got that knowledge, and this is why I kind of advocate niching your commercial strategies, because if you understand the tenant demand in a market, then you can understand how you can add this value. So yes, what we want to do is we want to find vacant properties. We want to find properties where we can maybe reconfigure the leases. So some of my clients recently have done some incredible deals where they've bought really badly managed properties, maybe multi-let properties where there's kind of 3-6 month licenses, leases inside the act have been allowed to kind of run over. On the face of it, there's a lot of risk associated with the property, but they're going in, they're normalizing and regularizing leases, they're increasing rents, they're lengthening lease terms, and they're getting a massive capital uplift. One of my clients recently bought a property for £720,000, and just by increasing the rent slightly and changing leases to 3 to 5 years, what she's doing is she's actually created a load of value. In fact, she's increasing the value by about £250,000 just by doing that piece of asset management. If you'll notice, there's no refurb, there's no reconfiguration, nothing. She's literally just extending leases. So obviously, the longer a lease is, the less risky that property is, the better the yield should be, and probably the better the rent is as well. So yeah, you want to look at that. Or you may want to do some physical works, which reconfigure the space, make it look better, redevelop it, extend it, whatever it might be. But the only reason you would do that is because it means you can get a better tenant or tenants in place. It would mean that you can get better leases and you can get better rent. So the holy trinity of tenant, lease and rent is what we're looking for. So what are those strategies that are working super well at the moment? So the first one I would say is multi-let space. So, and that takes on so many different forms. That could be multi-let retail, it could be multi-let office, it could be multi-let industrial. And, the reason why multi-let is so good from a portfolio basis, it's really good because you're mitigating your risk. If you've got a portfolio full of single lets, then there's a lot of risk in your portfolio. But if you've got a portfolio with lots of multi-lets, what that means is that even if one or two tenants fail or leave, you're still getting rent coming in. You can still pay the mortgage. And that's the reason why commercial finance really likes multi-lets, because they recognize that this reduces risk for them. So that's why at the moment you're getting higher loan to values for multi-lets, and you're getting better rates, especially with industrial multi-lets. And the other thing is that there's a swell of tenant demand at the level where you can there's a lot of tenant demand for small operators. So workshop space and industrial, small office space or storage space for offices, and startup retailers in retail. So obviously that depends per market, that depends per investing location. But a lot of locations across the UK, there's a lot of demand for smaller space. And so if you can find something larger and subdivide it, reconfigure it, and provide that space, that could be secondary offices, which is working particularly well in some locations because secondary offices are super cheap at the moment in quite a lot of places. So you can divide that up, carve it up, put lots of different uses in there: beauty therapists, beauty salons, health, offices, SME, shared offices, serviced offices, whatever that might be, industrial kind of workshop space, and retail kind of smaller operators. So multi-let space is working super well at the moment. Number two is kind of the strategy that I said, which works in any market, finding badly managed properties, tired landlords, motivated sellers. A, you're going to buy at the right price, but B, you've got a wide open goal to go at leases. And you can really make a difference in terms of reconfiguring those leases. Anything where there's the location is good. You tend to have to pay more in great locations, but there's a reason for that. There's a reason that you're being charged higher prices. It's because there's more tenant demand, there's more potential to add value. So anything that you can pick up for a great price, in every market, finding a motivated seller, and there's lots of motivated sellers out there at the moment. The trinity of death, or divorce or debt. They tend to be the main reasons, but there's lots of reasons at the moment why vendors might be selling up. They might be feeling fearful about the market. So buying at the right price, and then something where you can add some value. I can tell you from 30 years in commercial property, hand on my heart, the best deals that I've done personally and the best deals I've done in the corporate world are those where I've paid the right price for it. I've paid under market value. I could debate that with you all day, what under market value means, but I've actually, I've paid a price, which means that it's easy for me to add value. So, the third one really is buy at the right price. It's so important. And, you can definitely do something there. The fourth is kind of finding owner-occupier properties. So especially in the industrial space, there's quite a lot of owner-occupiers in that market. And very often they're either upsizing or downsizing space. So there tends to be a lot of space available in that particular market being sold by owner-occupiers. Their business has expanded, so they need bigger space than their existing premises, or their business is contracting or closing and they want to get rid of it. The third option really is where they want to recapitalize. Maybe they own their freehold, they want to sell the freehold but take a lease back. We call that a sale and lease back, and that works in any market as well. Obviously, you just need to check the quality of the tenant, the covenant, and make sure that that they're good for their money. But what a few clients of mine are doing at the moment is they're buying properties that they think are going to be vacant from an owner-occupier, and then the owner-occupier is saying, I do want to upsize, but the deal I'm going to do to buy a bigger property is actually going to take longer. So can I take a lease back for a period of time, and until I've kind of got that sorted? So basically, they're buying a property on vacant possession value, but they're getting a lease back for 6 months to 18 months, which gives them time to work their asset management up. So you can find these opportunities. You can just Google sale and leaseback opportunities. You can find them through agents. You can do direct to vendor marketing for owner occupiers, and find that kind of stuff. So that's another really nice way of finding commercial property deals that really do work.
This episode is brought to you by Bond Finance Limited. your trusted partner for commercial property mortgage solutions. Are you an experienced residential property investor about to diversify into commercial property, looking for funding options? Bond Finance can help. Whether you're planning to expand, refinance, or make a major property investment, Bond Finance provides expert advice with access to a wide range of lenders, from high street to specialist. Book a free discovery session today to explore how we can tailor commercial funding solutions to your unique investment strategy. Visit www.bondfinanceltd.co.uk and take the next step in your commercial finance journey.
So what else is working in the market? Well, we're looking at you're looking at sectors. Then you're looking at sectors that actually are performing really well. So I've already mentioned that offices are really dropping in price. Secondary offices, what I mean by that is they've had a tenant in there, they're older, they haven't got the latest kind of renewable credentials, and corporates especially, they're moving out to more kind of headquarters type brand new space. So that is definitely a market where you can buy properties for a really low price, lower than we've seen before. And, you can add some value by subdividing or reconfiguring space, or maybe even redeveloping into residential. That's another option with those. Shopping centres might seem terribly scary, and definitely you need to be aware that there's risk associated with shopping centres. But they're again incredibly cheap at the moment, so there's definitely some opportunities in that space. Anything in the market at the moment where there's not much tenant demand for it will be definitely cheaper prices, because investors will be fearful, and where there's fear, prices reduce. Now, why would you go for properties like that? Well, you go for properties like that because you have some market knowledge that they don't have. So that might be that there is a industrial property perhaps where there is little demand for the property as a whole, but actually, if you can subdivide that space, if you can actually create smaller units that cater more to market demand, you can actually, in some cases, in some locations that some of my clients are investing, you can double rents. You can increase lease lengths. It becomes a totally different asset. And more than that, commercial finance really likes it. So find properties where there's problems, and then and use your skills to add value. And of course, that's what I hold my clients' hands with all the time. The other thing is to be tenant-led. That's a strategy that works in lots of markets, especially at the moment. That can really de-risk properties. And you can find out tenant demand from websites like the Requirement List. You can Google tenant demands. You can speak to local businesses, join local business forums. You can speak to local agents and find out where the tenant demand is. And then if you can find source properties that are catering for that kind of tenant demand, then obviously that's a really good thing. And you become kind of tenant led. So, for example, trade counters. I know that if there's a screw fix, then probably a tool station will want to be close by, and perhaps some of the other trade counters as well. They like to cluster together. And so, if there isn't one or other of those tenants there, then there might be a potential to source and buy a property that they would take, and they usually take pretty nice long leases, and that can really, really work. So find properties that where there's tenant demand, and you can that's quite freely available. I would say that in the retail space, it's easier to find tenant demand. Find out what tenants are looking for than in maybe the industrial space or the office space. But that's where commercial agents can help you. They can really help you work out where the tenant demand is, and work out kind of what to do with it. So commercial agents are definitely your friend. I have a lot of feedback from clients that sometimes commercial agents don't call them back, won't speak to them, are quite elusive. It's a process of attrition with commercial agents. I've just been in a email tag with a commercial agent where I've just been chasing them for about 3 or 4 weeks, but I got there in the end. I've got a coffee catch up. It's about credibility. Think about forums that they attend where you could actually go and meet them in person, do viewings with commercial agents. And what agents are looking for in particular is speed and certainty. So, have some credibility in terms of, if you're a cash buyer, fantastic. And, have some credibility, talk the language, do what you say you're going to do, have some trust, and build a relationship. That's super important, because commercial agents can not only help you with off-market deals, they can help you stack deals that may be in other agents' marketing, but they can also find tenants for you. They can manage property for you. They can do rent reviews, lease renewals for you. So make commercial agents your friend. That's a really big tip. So today I've gone into, it's really hard to go into strategies that work because there are so many. And I think the other important thing to say is that different strategies work in different locations. So, for example, in Gloucester, Cheltenham, there's lots of demand from tech businesses because they're clustered near GCHQ and the cybersecurity headquarters, and therefore kind of lots of tech businesses go there. If you go around an airport, there's lots of demand from airport businesses, related businesses. Same with ports. Look at where there's investment in infrastructure, so location is really important because different strategies will work in different locations. So when you're looking to invest, try and find locations where there's USPs, where there's clusters of business, and that you find that out by reading local newspapers, local plans. Very often councils will refer to big employees, which is bringing this demand in. Go and get out in the car. There's nothing like going to look at commercial property, to touch and feel it and just really understand it. Speak to commercial agents, speak to businesses themselves, join business forums. There's so many different ways of doing this, but the problem is that, and you can get a massive competitive advantage by doing that, but the problem is people aren't willing to put the work in. So if you put that work in, you're going to have a massive advantage over other people, and you're going to really get to know that market. So there's certain strategies that are working super, super well in the current market. This will change over time. I haven't even really gone into the top end of the market, life sciences and, or logistics and all that kind of thing, but the fundamentals always stay the same. Find properties where you can do paper-based asset management strategies. Find properties where you can add value, and you can look at and where valuers are going to be favorable because they feel safe, they like that location. Clients of mine a couple of clients have invested in a certain market town, and it's a really solid market town. It's got great fundamentals, wealthy population, and you pretty much know that a valuer is going to feel comfortable about an investment in that location. So think about the way you're investing, and think about the location, think about the type of property, and very importantly, think about the tenant demand. And then there's loads of different ways that you can add value, lots of different strategies you can pursue. But the name of the game is trying to find something you buy at a lower price, and you do something to increase the value to get your money out as much as possible. So that's a bit of a tour through. Obviously, I go into all this kind of stuff with my clients in a lot more detail. But hopefully that's got your kind of juices wetted in terms of, what the art of the possible is, and hopefully pointed you in the right direction of some strategies you can look at right now to add value to commercial property.